from global equities to Australian small caps. This is the one category which even Standard & Poor's in their SPIVA report thinks active management works in. And this is our winner this year, Infinity, is proof positive that active management does work. When we were assessing the small caps, we were really looking for people who'd been able to take advantage of the opportunities that a couple of hundred stocks in Australia offers, and it's we were looking for coherent investment philosophy, a process that could be articulated to clients, and a track record of actually being able to deliver. So it's my pleasure now to invite Chris Adams from Infinity to come up to the stage, and we'll have a little chat about Infinity. So thanks very much, Chris. I mean, in your world, I mean, there are a lot of small cap stocks in Australia. What is the universe for Infinity?
Well, just simplistically, the universe is X50, and look, we can go to the top 300. Our sweet spot is 50 to 150. There's enough sort of inefficiently covered stocks there with enough liquidity. Once you go outside the top 200, you really start to struggle on the liquidity front. So we find that 50 to 150 the sweet spot for most of our holdings, Toby.
Yeah, and so within that universe, what qualifies a stock for inclusion in the Infinity portfolios?
Yeah, look, there's no sort of major bells and whistles to what we do. It's there's a few key principles, and we try to do them well, and we also have some very rigid risk controls. But we do require any company that's going to have earnings growth. Share prices typically need earnings growth for to improve and to provide an inefficiency in the share price. We like to see a strong and growing earnings track record. We're not similar to the last presenter. We're not in the concept sort of stage. We got asked about military stocks before, and we're going to miss those sort of drone shield. Drone shield comes up. Comes up all too often, but we're not in that sort of area. We're trying to grind out stable and consistent returns over this sort of time frame. And then secondly, management quality. Now, there's a number of sort of colourful types in the small mid-cap space, and hopefully and a lot you can't actually trust, and that's sad to say. So being able to rely on the management team to present their business and run their business is a key box to be ticked. And hopefully we're adding some value there, courtesy of having been around for a while and being able to know these people and sort of pick some of the warning signs. So that's a key part of what we do. We do assess peer group companies and so on and so forth, but no one really does that to the degree they claim they do. But that can be quite incidental to our main sort of process.
Yeah. Actually, one of the things which has interested me about the sort of small cap market compared to the private equity market, if you have a private equity manager, they'll talk about the opportunities that the listed markets don't offer. I mean, are you concerned that companies are not coming to the market, that they're not IPOing, that there's a sort of that there is a dwindling supply of good quality small and mid-sized companies?
Well, your point's very fair. There's been a dearth of IPOs in for some time now, and the ones we have seen haven't been of the greatest quality, and in fact we've ignored all of them. So that one thing. I mean, there used to be easy free kicks from the IPO market going back a while now. We're not seeing any of that. But as you can see from the numbers, though, there are still some pretty decent returns you can get just by applying these principles I spoke about, and sticking, as you spoke before, sticking to your process no matter what's happening.
So what is a good example of the sort of company that does make it to the Infinity portfolio?
Yeah, well, we sort of break the universe into about 6 or 7 major risk buckets and try and pick the teeth out of those. So we're not top down sort of macro stock pickers. We'll sort of look at resources, growth, technology, interest rate sensitive, value, and try and get a broad representation in those without being rigidly sort of close to the benchmark, and also having that, it's a common acronym, having that GARPy bias, if you like. But so within that, we'll own something like, say, take gold, which is about 15% of the the small mid-cap universe. We own Vault Minerals, which is a mid-tier gold producer, and there's about 10 to 12 to choose from, and we just like the sort of value proposition that offered versus the peer group. So we're sort of trying to pick the teeth out of what we consider to be these big buckets, whilst having a higher beta and higher sort of PER sort of bias to the whole sort of structure.
Right. Okay. And so, I mean, you mentioned Vault. Are there other companies? I mean, that's a minor, and there are a lot of. I mean, we just heard Aorus, well, that's not a market that we're in. So, are there sectors that don't appeal to you in the sort of small cap, mid cap?
We don't rule out any sectors. Commodities have been very good for us, but I take the point before. I mean, that can be. We're not necessarily trying to call the commodity. We're certainly not trying to call the gold price. We very much doubt anyone's ability to do that. But finding the best opportunities within that sector are appealing. Look, as I said, we don't go near biotech. We don't. Look, there are some military stocks like Codan, arguably, and Austal, which you could own, but we're not in the sort of concept areas. We don't go into developers, greenfield explorers, or 9 times out of 10 they come unstuck. And when you look at the trouble CSL, who arguably Australia's biggest biotech player, have had with their biotech portfolio, you can see what a tough space it is to consistently generate returns. So it's pretty much bread and butter. We don't ignore valuations, but recognising that in some of these high growth sectors which you want to be in, you've got to be prepared for some pretty juicy valuations from time to time, which is certainly the case at the moment. But what we'll do is if we look at something that's on a really high PR, like Catapult's a good example. There's probably a few owners of that. We're really going to like something if we're going to pay 120 times for it. So we're not in a company like that, for instance. But we do own 360 along with everyone else. And because we think the growth drivers there are so compelling, and and the runways extremely long as well.
Yes. Okay. And so, look, let's talk now about the part you expect. I mean, Infinity offers a number of portfolios. It specialises in multi-asset class. I mean, what part do you expect the small cap portfolio to play? In a broader portfolio.
Well, the attraction in smalls, whether it's Australian or global, is the alpha component, the value add component, so that markets, while they've been going very well lately, aren't always helpful. And smalls and mids give you that ability to add that sort of, like if you look at the numbers there, there's been some periods where you can get a meaningful return regardless of whatever the market's doing. And the reason for that is you've got, as I said, more inefficiently covered companies. You've got far more choice. Like I mentioned, gold, there's about 10 to 12 names you can pick from. Even other commodities where in the large caps you're pretty much stuck with BHP and Rio and so forth. We reckon you can build up a far more compelling portfolio from a number of the junior players, and then you're not encumbered with whatever it is, 30 to 40% of banks. So there's more active risk. So there is, as you guys would know, a large dispersion between the top to bottom managers. Yeah. So getting a good one who can add a lot of consistent value can be helpful when markets are, not so helpful. So, yeah.
Well, look, congratulations on being a winner this year, Chris, and on the work you've done in the portfolio. Well done.
Thanks, Toby. Thanks, everyone.